What's good, y'all? This is Joel, and I'm coming at y'all with another banger. And with this video, this is going to be a market recap for the NAS100 pair for Friday, July 14th. So if we jump right into Forex Factory, you see that we have a news driver event at 10 a.m. But this should be fine because we didn't trade for core CPI or the core PPI events. But Friday is a trading day that I would be behind the screen for, that I actually do remember, live trading this day. Uh, to give the spoiler, unfortunately, the trade didn't activate our entry, but I had the limit set and everything. Um, so I can't really say I missed the trade because it never like activated. But this would have, if it activated, this would have been like a super massive like risk to reward win of a trade. So I wanted to provide the recap for you guys. This candle right here, 815 to 830 is the 830 candle. So we look left, which is the most obvious swing high and swing low, right? The most obvious swing high would be right here. From this point on, we look left, and here we have the buy side liquidity. Now we want to look for the most obvious swing low from this 830 point, and it would be at this level right here. I would mark it as sell side liquidity. So we have our two um, pools of liquidity here, right? Both buy and sell. Now we can jump into the 1 minute time frame and see what happens. Now, as a reminder, um, we have at 8:30, beginning at 8:30 is a stop loss. So that's when we can expect price to start heading towards the liquidity pool, if not purging one of the sides, because we want to see one side get taken and then deliver a breakup structure to head towards the other side. But in a perfect world, right, if at 8:30 price purges buy side liquidity, we want to see it push even deeper after 9:30, and same in reverse. If at 8:30 price attacks sell side liquidity, then at 9:30 open, we want to see it push lower before delivering a breakup structure higher. So we'll just move forward and see what happens. So we are already past the 8:30 mark, right? So I'm just watching price, and if price um just continues like floating in this range, there's nothing else. There's nothing for us to do. We want to see one of the edges of this range, right, get attacked, one of the liquidity pools to get purged into. Right? So price is just honestly just consolidating, like it's sort of just moving sideways, right? And now we are getting close to 9:30. So this next candle right here, boom, this is the 9:30 open. So as you can see with the 9:30 open, clear as day, we purchased buy side liquidity, and that's what we want to see, right? We want to see a massive candle push into the liquidity pool, so there's no um, ambiguity as to whether the orders were activated or not, right? Like this is a large candle which activated the orders here, here, right, and any other, and here, right, like any other highs, right? All these highs were taken. So that's a good sign that orders were activated and that price, um, if it delivers a break of structure lower and a fair value gap, right, that it's likely to want to go down to clear the liquidity below here. So at this point, right, we see the liquidity grab. So the most obvious structure point, the last swing low is at this level right here. So now we will keep going, right, to see if price will deliver us a breakup structure. So now I'm just interested in stalking price until it delivers a breakup structure. So you see this high right here got cleared by this candle. So now we move the light bulb icon under this swing low because that would now be our breakup structure, right? Now, boom, another push higher. So the most obvious swing low is here. That is our new low that we want to see get broken, right? And we just continue stalking price. So it almost got broken. It didn't quite yet, right? I'll just put a line here so you can see, right? So this level is this low is still intact. So price is still bullish until a structure break here. Perfect. So a new high was formed, right? So where is the most obvious swing low, right? If we go down, it would be this level here, the most obvious swing low, right? So that's our last structure point. Boom. Okay, so these highs were cleared once again. So now the most obvious low is at this level here. So we don't need this line, but you guys are seeing it, right? I'm just literally just stalking price until it delivers me a break of structure. Okay. Okay, so what I'm doing now, guys, so what I like to do whenever I'm trying to figure out where's the next structure point, like in this case, it looks like these are equal lows, but they're actually not. And it's because if you follow my cursor, right, I'm looking at the values in the top left, right? So I'm looking at the low values where it says L, the third number. So for this candle on the left, the low is 665.4, and for this candle is 665.8. So they're actually not equal lows. So that means that this candle here technically counts as the last structure point because we created a new high. So if these were equal lows, then I would have kept the light bulb down here as this being the last structure point, but they're not. So this one I consider to be the last structure point right here. If the market decides to go and break it. So now we continue higher, right? So we made another push higher. So now this low down here is the structure point that we would like to see get broken, right? And we just keep rinse and repeating. Whenever high gets cleared, the same thing, right? These two candles here are not equal lows, so move it up, this candle, and then boom. So immediately, guys, immediately high gets cleared, right? The new structure point gets at this level, and then once price clears the high, we're seeing movement straight down, right? And we also see a gap that was left. So guys, just remember, we want to see a fair value gap, but we want it to be within the displacement range, which is the displacement low to the displacement high, from where the last structure point is to the highest point in the market, right? We want to see a fair value gap form within that range, which you can clearly see by the gray shaded box. We do have a fair value gap here. So the second that this candle closed, once this candle began forming, even like the wick, or as soon as price pushed under this level, that's immediately a break of structure. But the second this candle closed and left this gap here, the first thing that I thought about is, okay, that's my trade, that's my entry. So not the biggest fair value gap in the world, but remember, this is a small range, so that gap is actually um a reasonable size for the range. Now, something to be aware of is that this gap is not really at a premium, right? It's not above 50%, but this is the only gap that exists within this range. Um, so I would still take the trade, right? Because this trade did meet our criteria, right? All of our confirmations, right? And we were to take this entry, right? Our final target would be at the opposing sell side liquidity, which would be a 1 to 10.5 risk reward, which would be an absolutely phenomenal trade. So on this day, I had my sell limit set, right? It was ready at this level, stop loss above the high, and take profit at the sell side liquidity. But unfortunately, as we go on, we see that price comes close to the entry, but never actually activates the entry. So when I have, for me, my I only trade from 9:30 to 11 a.m. Eastern, right, New York time. And after 11 o'clock, I don't take any trades. So you guys see how this structure break and the fair value gap was formed at 10:25. So this trade would only, like this limit order will only be active for like 35 minutes. So if I'm not in a trade by 11, then I would delete the order. The only time I will delete the order is either when it hits 11 o'clock, or if the opposing liquidity pool was taken, right? If the opposing liquidity pool was taken, there's nothing for me to trade, so I just delete the order. In this case, I had the order active, but unfortunately, the trade never activated because our fair value gap was never filled in. But as you can see, if I press play, price begins to melt. It does deliver, a little bit of a retracement, but for the most part, it goes down, and then during the New York lunch session and then the New York PM session or the afternoon session, right, you'll see that price will eventually go all the way down, um, and ultimately smash the sell side liquidity as the final target, right? So you're seeing here the trade does in fact hit the final target down here for a one. Well, if the entry was activated, it would have been a uh 10.5 risk to reward trade. So you risk $100, and if you took it to the opposing sell side liquidity, you could have made like what, 1,000, yeah, 1,050, right? Almost pretty much 10 times in your risk, assuming you didn't take partials. But as traders, we want to take partials, right? Because we don't know if the market is actually going to go to our final target or not. So you definitely do want to take partials along the way if a trade like this activated, right? You have some lows here, low here, right? A massive gap here, right? So the same logic, um, right? You've seen the fair value gap there, right? So the same logic that we use to trade, whereas, when it comes to looking for a trade, we find the liquidity pools and then our entry is in the fair value gaps. Is the same idea when it comes to taking partials along the way, right? You want to take partials um, at liquidity points, right? So like these lows, right? All liquidity, any fair value gaps you see, like a gap right here, right? That's a target, right? The gap here, that's a target. So there's ways you could have taken partials along the way. So if price came up and reversed against you and hit you at break even, you still would have, made money because you would have taken these lows. So just wanted to show you guys this example because this trading day I was actually actively behind the charts, and I had my limit order set, but unfortunately price did not tap me in. So I can't really say it's a missed trade because the trade never happened. Um, so I don't want I'm showcasing this to you to let you guys know that trading requires discipline and consistency, right? So if I were not a disciplined trader, right, I would have just like jumped in because I had FOMO and I didn't want to miss the move. But like following your rules and being disciplined is what's going to allow you to be successful in this market. Like even though this trade didn't pan out, I know there'll be a trade like this at some point again in the future, right? Just because the market repeats. So this stuff happens over and over. So it's no doubt in my mind that another opportunity like this will eventually form, and then when it taps into the fair value gap, I'll be able to take the trade and write it down. So there's no reason to be fearful. There's no reason to like beat yourself up and say, "Oh man, like, you know, I knew this shit was gonna pan out. Like I should have just jumped in." And you don't want to think that way, right? Like the market didn't tap you in and never got to your entry, so there was never a trade. But I just wanted to showcase this to you guys to show you, honestly, what's most important about this is just for you to see the truth behind the market, right? That the game that's being played is that price is actually pushing in one direction to activate all the orders and then breaking structure, usually tapping in to rebalance itself, and then making its way down to clear the opposing liquidity. Like the market only moves for liquidity and to rebalance itself, right? Like it doesn't like leaving, imbalances like this, like these large gaps in the marketplace. It doesn't like doing that. So those are the two main reasons why the market moves, right? And our strategy, we utilize both, right? With the liquidity pools and then having our entries be at a fair value gap. So there was no trade that was missed because no trade ever happened. Like our entry was never tapped in. But what's important is understanding what's going on and understanding the reasoning for this so that when an opportunity does present itself, you know how to navigate that situation. You know how to operate, right? Like I know that next time around, I'm gonna see the same exact setup and I'm gonna take it, right? So there's no reason for me to concern myself, no reason to cry over spoiled milk, right? Like at the end of the day, we still protected our account, we still preserved capital, right? So nothing happened on this trading day, but you know we're still able to live for another day, to trade for another day, right? So at the end of the day, even if no trade ever happened, it was still a win for us, at least in my book. So um, just wanted to go through this day to, showcase this recap for you guys. This was a day where just a trade never materialized, but you guys still see here the the logic is still there, right? The same strategy is being applied every single day, and you're seeing that virtually every single day, the NAS 100 market is going after both liquidity pools and taking out traders on both sides, right? So this is why most traders lose in this industry because they're not aware of the game that's being played and what the market's actually doing, right? The strings that are being pulled, and I want this series to help show this to you guys that this is, what's actually happening, and this is the game that's being played. So if you found this video helpful, do leave a like, subscribe. If you have any questions, do drop a comment. I'm more than happy to review you guys' comments, answer any questions. And if there's anything that you're unsure about or any ideas you may have, like I'm open to touching upon any trading topics you guys have. So do appreciate all the support you guys give me, and I hope you enjoy this video and have been enjoying the series because I want to keep pumping out content. And you know, for me as a young aspiring trader, like I've been trading for a few years now, I wish that I had what I'm doing now is what I wish I had as a young aspiring trader, right? Someone that I can see the day to day, right? Understand their logic, their reasoning for their strategy, right? And be able to see it every single day because a lot of times on YouTube, and I get it for YouTube, it's like entertainment and for views, but a lot of times on YouTube, right, you see traders, they'll say, oh, make like $100 a day, do this, do that, right? You can make this much every single day, when in reality, that's not always the case, right? Like, there's gonna be days where you stay away from the market. There's gonna be days where you just don't get you don't get tripped into a trade. There's gonna be days where like you just shouldn't be in the market. And then there's gonna be those days where you actually have like winning days, right? This is just a day where a trade never materialized, but that doesn't mean that the strategy is broken. That doesn't mean that we need to lose hope or change anything, right? Like the market is still doing exactly what we're expecting it to. And so all it is just for us to be patient until it happens. And that's the reality of trading, right? All we need is one trade a day. If you take a trade and you get stopped out, then if the market delivers a re-entry, right, then you could take a re-entry at half risk. But if not, then all we need is just one trade a day, and that's more than enough to be a successful trader in this industry. Don't let anybody ever tell you otherwise, right? So, um, once again, if you found this helpful, do leave a like, subscribe. Your support is greatly appreciated. Once again, hope you found this helpful. This is Joel. I'm coming out with more content. I'm gonna keep pumping these videos out. So thank you so much if you stopped by and watched this video. I'm out. Peace.